finish on time. And I think by this would be the point where you start the recording. And so let me welcome everybody. Good morning, good afternoon, and also good evening to all of you, depending on the time zone that you're in. Welcome to our third joint IFRS EAA virtual workshop. My name is Thorsten Zeller, and I'm a professor of accounting at the University of Munich and the current president of the European Accounting Association. And I will be your moderator today. With these workshops, we're establishing a tradition of supporting the IFRS Foundation in its outreach to the academic community. And our first two workshops in the series covered projects from the ISB's agenda. The first was on the primary financial statements exposure draft, and the second one was on the goodwill and impairment discussion paper. And both were recorded and they're available for watching on the EAA's Accounting Resources Center website. And today we're again more than 190 participants, almost 200 participants. And again, it's good to see many familiar faces. Today's session is special. So our topic, the future of sustainability reporting standard setting, is not an IFRS project, but it's a matter being considered by the IFRS Foundation trustees. So specifically, we'll be discussing the trustees' consultation paper on sustainability reporting. By some, sustainability reporting has been described as a crossroads, an issue of great urgency where accountants may have a role to play when it comes to the future of the human race and the planet as we know it. So clearly today is about more than debits and credits. And even within academia, today's issue is controversial. Whereas some consider sustainability reporting another transparency device to make capital markets more efficient, others look to it as a policy tool that can harness firms to contribute to achieving the UN's Sustainable Development Goals. Many others are somewhat torn between these 2 points of view. But wherever I think we may stand on this, I believe this discussion today we're going to have, it calls for what our colleague Giovanna Michelon calls academic empathy. So a willingness to make an effort to understand other people's perspectives and views. I appreciate very much, therefore, that the IFRS Foundation trustees are reaching out to the academic community and that they're very much in listening mode. So please do take this opportunity to share your perspectives by participating in today's discussion. And please consider writing a comment letter on the trustees' consultation paper. Let me now introduce today's speakers. For the IFRS Foundation, let me welcome Trustee Michel Madeleine and Executive Director Lee White, as well as IFRS Foundation staff members Anna Hammond and Sam Prestige. Further, we're joined by two ladies representing the EAA's committees that monitor and comment on developments in the international reporting standard setting arena. Anne Jorissen chairs the EAA Financial Reporting Standards Committee, and Begonia Giner is head of the EAA Stakeholder Reporting Committee. Both will introduce their activities in a minute. Let me further introduce two valued colleagues who have worked extensively on reporting and standard setting and who can probably be characterized as arguing somewhat different perspectives on sustainability reporting. Carol Adams is Professor of Accounting at Durham University Business School, UK, and also Swinburne Business School, Australia, where she's joining us from today. She has 30 years of experience in research and standard setting and sustainability reporting, and she's been involved in various global corporate reporting initiatives. Welcome, Carol. And we have Richard Barker. Richard is Professor of Accounting at Said Business School, University of Oxford. His research concerns the design of financial and non-financial corporate reporting standards, and he's the academic member of the UK's Accounting Standard Setter and a previous research fellow at the ISB. But before we start now, let me briefly explain our format. In the first part, the IFRS Foundation will briefly introduce themselves and the consultation paper. Then we're going to have the FRSC and SRC chairpersons, so Anne Jorissen and Begonia Giner, each briefly summarize their committees related activities. And afterwards, our two academic speakers, Carol Adams and Richard Barker, will briefly introduce their perspectives on the matter. So having said that, Lee, may I please ask you to briefly set the scene?
Lovely, thank you, Thorsten, and let me pass my good morning, good afternoon, and good evening to those in this discussion. First of all, I'd just like to say thank you very much to EAA for the opportunity for I and Michelle and colleagues to engage around our consultation paper. I think it'd be amiss of me not to also recognise and thank EAA for the deep and rich relationship we've had between the EAA and the IFRS Foundation and IASB over many years. And I know the advice and thinking through EAA has always had a strong influence as we've worked up our financial reporting standards. Thorsten, I'm conscious as well about the time limit. So in this session, it's really going to be a very small number of slides that I'll move through fairly rapidly, just to warm up around the engagement to our consultation paper. If I can go to the next slide, please. And one more, thank you. A couple of points here around, I'm not going to go fully through the paper. It's been released. It was released on the 30th of September. The paper has come from a work that the task force has done, which Michelle is part of that task force. It was set up at the initiative of the trustees of the IFRS Foundation. And this paper, out now in public consultation, is really there to identify the demand from stakeholders in the area of sustainability reporting, and to understand what the foundation, the IFRS Foundation, could do in response to that demand. And so you'll hear often from either myself or the trustees continuing during this period to use this phrase around demand driven. Thorsten, you used the phrase about listening. We're certainly in listening mode and learning mode as we go through this consultation period. As the paper was being developed, we benefited from the independent advice from an expert advisory group that the trustees had set up. That advisory group is included in reference to our paper as well. Just to give you a snapshot then of the paper, and I know we'll do this in more detail as we go through it. It starts really at a very high level of questions around this focus on demand and the potential role of the foundation, with the suggestion around the creation of a sustainability standards board. But then we move through into areas around particular specific questions, and I know in our later sessions we'll cover that in more detail. Perhaps just to finish with this slide, those that already have the paper may refer to it or at least make note of this, but paragraph 31 in the paper refers particularly to the key requirements identified by the trustees, that if we're provisionally heading towards the creation of the Sustainability Standards Board, these would be the key requirements for success. And that features again in the question, or one particular question in the paper, to make sure we receive feedback around that area. If I could go to the next slide, please. Thank you very much. So very quickly, the paper outlines an assessment of the growing and urgent demand in this area of sustainability reporting. The trustee task force had informally engaged with cross-section of stakeholders, and it certainly had felt this sense of demand. It became clear that sustainability reporting is continuing to increase in importance for all stakeholders, and they share that common sense of urgency in this area. We reflect around the supply side in transition. We know that many organisations are currently providing sustainability reporting frameworks, standards and metrics. And some of that work overlaps, but ultimately each standard setter or framework setter is seeking to produce specific products for what they see as their core stakeholders. Now, as well overlaying that, we know that some countries and regions are also taking their own initiatives that complement that work of the private sector initiatives that I just referred to. But certainly there was a real sense of the need for consistency in the reporting. Outreach with stakeholders, research by the task force has revealed that a wide range of frameworks and standards are in use, and preparers are faced with opting to report using multiple standards. And therefore, the goal really is, how do we find a way to bring more consistency and comparable information? Next slide, please. Again, very quickly, this flows through that analysis. What role could the IFRS Foundation play or contribute? And so we've seen this demand coming for more consistency, a sense of interconnectedness between financial and non-financial reporting, but also recognition in the history of the IFRS Foundation, the ISB, a sense of global governance, standard setting, and due process have all been highlighted as key attributes of the foundation. And so there has been calls already for the foundation to play a role in this space. And whilst I won't read them out, that slide gives you a sense of the reference to those calls. Next slide, please. I know we'll explore this further, but we've already, through the task force, been able to engage with many of the institutions and initiatives that have already been contributing their thinking and work in this space, some with fantastic histories of producing their requirements and guidance, and also very focused around the engagement at a global platform and with the regional initiatives. And so we certainly see at this point there's a great opportunity for close collaboration and to find complementarity between what might happen at a global level and the regional activities and initiatives. We think there's an approach there that allows both to benefit from each other on what they might set out to do, and we'll perhaps cover that in more detail as well. Next slide, please. Thank you. This is where I'll conclude. I mentioned earlier the paper was released on the 30th of September. Right here we are, right in the middle of outreach. We've got a comment deadline of 31st of December, and certainly in the first quarter of next year, we'll be able to produce some further analysis of the responses we've received. And if I could conclude, Thorsten, by also adding my request to your earlier one, please, those listening in and today or on video later, if you have an opportunity, please put in a response to our paper. The more that we hear, the better the thinking and decision-making of the trustees will be better informed. Thank you.
Thank you very much, Lee. If I may hand over now to Anne and Begonia to briefly outline your committee's plans. Anne, would you like to go first, please?
Yes, Thorsten. Thanks a lot for sharing or for allowing us to speak a few minutes of the activities the EAA's Financial Reporting Standards Committee will undertake in respect or with respect to this discussion paper. So just to set the brief, the purpose of the Financial Reporting Standards Committee is in fact to bring contributions of academic research into the standard setting process, and more specifically in relating to financial reporting. So we feel almost immediately that this issue of sustainability reporting is much more in the remit of the EAA Stakeholder Committee. But although it's more in the remit of the EAA Stakeholder Committee, also we as Financial Reporting Standards Committee will look into it because of the interconnectedness between financial and non-financial reporting information. So what we will focus on in this discussion paper is the question of the key requirements for success for a standard setter. And we intend to share in response to these questions insights from the academic literature on critical success factors for standard setting. And we will not limit ourselves to insights from the academic accounting literature, but we will go to the broader academic literature on standard setting. So that is our focus. And I guess that everyone can already figure out that when next year on the EISB's agenda, the management commentary will come up for discussion, that we will also participate in that one, because in the management commentary, ESG information, sustainability information can be included. So with the Financial Reporting Standards Committee, we're very excited about this farce. And we would like to stimulate all participants in this farce to share their views on the interconnectedness, financial, non-financial reporting, materiality issues. So please take part actively in this farce so that we can all contribute from it. So thanks a lot.
Many thanks, Annie Olsen. Begonia, your committee has already been mentioned, the Stakeholder Reporting Committee. Would you like to tell us about your prospects and your plans on this? Begonia, we can't hear because you need to unmute yourself first.
Yes.
There we go.
Now.
Yep.
Well, thank you. Thank you, Thorsten. Yes, again, good morning, afternoon, evening, whatever time zone you are. It's a real pleasure to be here today in the symposium in which the IFRS Foundation will explain to us, to the academics and the EAA members mainly, the details about the sustainability reporting project. Well, the mandate of the Stakeholder Reporting Committee, which I chair, is to actively participate in the debate about how organizations can and should inform the wide variety of stakeholders about the non-financial activities they perform and their impact on society. Thus, we engage with policymakers and standard setters with the aim that the academic community can have an impact on new policies and standards. So based on that, we have been discussing the document, and I suppose I'm not discovering anything new if I say that among the 10 people, the 10 members of the committee, there are very different views, very different opinions on it. But in fact, our goal is to participate, and we will also take the opportunity to participate in the management commentary later when it appears. Although most of us think that there is a need for a unique set of sustainability reporting standards, some argue that the GRI already offers a widely accepted framework. But there is also the view in the committee that it is better to maintain the competition on standards. So this is leave things as they are now. Nevertheless, we tend to agree that the IFRS Foundation has something to say and that the new board could be a useful instrument as it would help connectivity between IFRSs and sustainability reporting standards. But there are many doubts about the role that the existing initiatives, the 5, CDP, CDSB, GRI, IIRC, and SASB, will play, although we believe they should play an important role. It is remarkable how fast, how quickly these things are moving these days. We just found last Wednesday, that the 5 will become the 4 very soon after the merger of IIRC and SASB. But we are aware that the foundation has expertise in standard setting, but the other bodies have more experience on that. On the topic, sorry. Besides, we don't know how the foundation plans to engage in the new landscape with the future EU-IFRS body if it finally exists. That said, we, the Stakeholder Reporting Committee, not only consider relevant the use of sustainability reporting for investor decision making, but we think that other users also want to know or need this information, so they should be considered in some way. Well, before concluding, I just want to thank the IFRS Foundation, the participants for being here today, and I encourage all of you to take an active part in the session. Thank you very much.
Many thanks, Begonia, for this brief introduction. So you see that the EAA is already active in this space, and there should be something coming out of us that hopefully is constructive.
So we are aiming at that.
So finally, may I ask Carol Adams and Richard Barker to give us your perspectives on this matter. Carol, would you like to go first?
Yes, thank you, Torsten. Hello, everybody. I'm very pleased to be here and give some perspectives on some of the claims and the views that are in not just the trustees consultation paper, but also in some of the papers that have influenced that, the paper by the WEF, the IMP, and even the recent press releases by the IIRC and the SASB as well. So my thinking and the influence on my thinking really goes back to the work of Anthony Hopwood, Peter Miller, Anne Loft and their colleagues on the relationships between accounting organizations and society, the way that accounting makes some things visible and other things not. And there's been, since that time, a lot of research undertaken looking at how sustainability reporting and accounting influences corporate and investor behavior. So first of all of these papers really talk about sustainable development and the urgent need for sustainable development and various different strands of harmonization and what that means. And I'll talk about that through the presentation. But on sustainable development, you know, we have to think about what is the route to get there. So you can take the enterprise value creation route and you can talk about impact on sustainable development without talking about value. But you can't talk about any kind of value creation or financial returns without knowing your impact on sustainable development. At the end of the day, if we don't achieve sustainable development, nobody's going to be creating any value. So then that brings me to this notion of the investor perspective. There are growing concerns about simplifying, about shifting capital to address the sustainable development goals. And there's, you know, a growing interest in impact investing. And then you've also got the likes of BlackRock, the world's biggest asset manager. And we've heard this week that the European Union Ombudsman has reprimanded the European Commission for appointing BlackRock, who put in a low bid to advise the European Union on ESG in banking regulation. And the MEPs were concerned about that motive and whether they wanted to influence the regulation to be softer. Remember, they put in a low bid. So then you have to question the motives of investors. And we heard Larry Fink earlier this year told companies that they had to use a particular standard. So we need to question why he picked that those standards that are not really addressing sustainable development issues. We hear talk of investors wanting simplification, consistency, comparability, and largely quantified data. But I want to just look briefly at what we're missing by taking that route. So the research of you know, my colleagues in this field include asking companies and investors about the way that they're approaching these things. And companies are telling us that investors are not looking at the right information. And so this is companies telling us this. So that's of concern. And at what point do the physical climate change risks, poverty and inequality, at what point do they become important to investors like BlackRock? Perhaps still not important enough. We know that the pandemic has had a significant influence on industries like airlines and cruise companies, but those industries were not reporting pandemic risks and their possible mitigation strategies against those risks prior to the pandemic. I don't know whether that's a SASB indicator or not, but clearly this is an issue that's had a significant impact on investors that may not have been predicted by looking at you know, the traditional investor perspective, because they're not asking these questions. And they're not asking about the governance over risks like this. how would we measure the effect of these issues on enterprise value creation or the financial statements if we did to decide to include all these things? This is not a straightforward issue. So, you know, what do we need to do? Well, we need to, and organisations need to understand the positive and negative impacts of their operations on sustainable development. They need to develop a strategy accordingly. They need to have a governance oversight of all of that, expertise on the board, and they need to report on all of those processes, because those processes, how they develop strategy, that governance oversight should be absolutely critical to investors. Investors should want to know about that. And so companies and investors really need to resource up. They're telling us they want it simplified, but they also need to resource up. We also need some honesty about what organisations are aiming to achieve, what it is that they are doing and what it is that's achievable. The proposals put forward, taking an investor perspective, will not help us get to sustainable development. It won't achieve harmonisation, because companies want and need to provide information to a broad range of stakeholders, and they're also increasingly reporting against and using the Sustainable Development Goals in their report, recognising that that's important information to national governments, another key stakeholder in all of this. On governance and due process, well, the other bodies do have these strong processes, and I read the consultation paper, and I thought, well, the IFRS stakeholders will be led to belief on this, that the other bodies don't have sound processes. I know very well the GRI has very thorough processes on governance and due processes. It has an independent appointments committee that appoints members to the Due Process Oversight Committee and the Standards Board, and its governance processes are multi-stakeholder, and they cross regions, including developing countries, where sustainable development issues are a big issue. And you have to have a multi-stakeholder governance processes if you're serious about achieving sustainable development. On synergies between the ISB and the SSB, another thing that's been spoken about, I wonder what these synergies are. Sustainable development has synergies with people and planet, not with financial statements. And there is a strong argument for these boards needing to be completely separate in governance, because a sustainability standards board setting out to achieve sustainable development must not be influenced by the needs of investors unduly. So I have concerns about that assertion on these synergies. I know very well about the achievements of the IASC during the 1990s on financial reporting harmonisation. I was researching it. Sir David Tweedy came and taught my students at Glasgow University in my international financial accounting class. You know, in sustainability reporting, the situation is very different. In the 1990s, voluntary reporting on sustainability issues differed significantly across countries. In the year 2000, the first GRI guidelines came out, giving a base for more comparability. The issue that we have now is that governments are really just starting to get interested in regulating on this in a large scale. They weren't particularly interested before. This is not because there is a problem with the GRI standards. This is because times are changing. And so clearly, if standards are not mandatory and not enforced, there is going to be a lack of accountability, and that's what a vast bulk of research shows, that is an issue. So coming on then to what can the IFRS Foundation best do? Well, the existing bodies do also have relationships with regulators and national governments, but perhaps different areas of national governments that might be more relevant for sustainability reporting, but anything that the IFRS Foundation could do to add weight to help make these standards mandatory would, in the end, help make better financial statement reporting incorporating sustainability issues. And I'm talking about helping make the GRI standards mandatory, because these are the ones that are looking at impact on sustainable development. And remember, I started saying you can't create value unless you're addressing impact on sustainable development. And so I think also, you know, there could be some more liaison with UN bodies who are also working with national governments in addressing impact on sustainable development of corporations. So this is of concern, and there are various UN initiatives around this also, and they have connections with appropriate areas of national government. I'll stop there. Thank you very much. Oh, just one more thing. Lee mentioned the various different standards. There is really just one key standard looking at impacts on sustainable development. The others have all said that they're looking at the investor perspective. The GRI is the only one that's looking at impact on sustainable development, and it has a long-standing reputation with over 10,000 companies around the world using it. Thank you.
Thank you very much, Carol. So Richard, please unmute yourself and walk us through your perspective, please. And afterwards, we're going to open to the plenary discussion after the foundation has led us through the main proposals in the consultation paper. Thank you.
Thank you, Torsten. So my Wi-Fi dropped just as Carol was finishing, so I'm now on my mobile phone. I hope this is working okay. I may end up connecting. You may end up seeing two versions of me. I'm not sure, but we'll see. So first thing to say, I agree with a huge amount of what Carol has just said. We reach different conclusions, so it's going to be important to figure out why it is we reach different conclusions. But I have a great deal of common ground as well. So what I would like to do in the limited time available is present an argument in favour of a sustainability standards board created by the IFRS Foundation. And I'd like to do that by describing four different elements to an argument, and then a conclusion to that argument. So the first element is simply a statement of common ground. And I think there is considerable common ground. Firstly, on the strength and importance of the sustainability challenge that society faces. So if you take the IPCC advice, we have to get to net zero carbon by 2050. We have to be reduced by 45% by 2030. I mean, this is dramatic transition. It's also, it applies across other planetary boundaries. So we have known, as it were, science-based targets for where society needs to be, and that implies very significant transition. So these are unprecedented challenges. We agree on that. Second thing is that institutions matter. So we can't get from where we are now to where we need to be without understanding how the economy is institutionally organized currently. And in that context, relating to the IFRS Foundation, capital markets, investors, and companies are critical components of the economic system. The third thing, area of common ground, is that the IFRS Foundation, just as a straightforward matter of description, sets standards relating to financial statements globally for the benefit of investors. So that's its mission as currently enacted. Okay, so that was the first thing to describe. The second thing to describe is relates to the mission that the IFRS Foundation has, and whether in the context of sustainability reporting, it is currently meeting that mission. And I think, so the question is, does the IFRS Foundation provide sustainability information that is material to enterprise value, is one way of describing that. And the answer to that, I think, is through the lens of the financial statements, no, it clearly does not provide the sustainability information that is material to investors in making investment decisions. So there is material information for investors that relevant to pricing on capital markets that the IFRS Foundation is not currently providing. The reason for that is that the framework that the IASB operates to, rightly, because of the nature of financial accounting, is grounded in rights and obligations. And so if you take a commitment to a net zero carbon target, a very real example is that the UK government has legislatively bound itself to this target, right? So by law, the UK must be net zero by 2050. That obligation doesn't affect financial statements in any material way currently. The reason being that it's a target. You know, the obligation is to meet a target by a certain date. It doesn't give rise to a liability that arises from a past event. And so we know that there is a huge economic discontinuity on the horizon. We know that's going to have a profound effect on business, on the ability of business to generate value. But financial accounting is fundamentally, by design, ill-equipped to deal with providing relevant information. So the IASB is right to ignore sustainability to a large degree because it's not within the remit of the conceptual framework as it's currently set up. But these issues of science-based targets are distinctive to sustainability, and they represent known discontinuities. So there is information that we know we can report about progress towards known targets that are in the benefit of investors to know about, right? But we don't currently provide that information. We being the IFRS Foundation in this situation. So in other words, there is a gap. And within the mission of the IFRS Foundation, a sustainability standards board would fill that gap. So if the IFRS Foundation aims to provide relevant information about a corporation to its investors in order to better inform capital markets with regard to the economic allocation of resources, there is a gap. And a sustainability standards board would fill that gap. Notice the notion of materiality there is not one of its material, you consider materiality simply within the lens of items included in the financial statements. The lens is broader. It's materiality with respect to the determination of enterprise value. So another thing to say there is the IASB itself is not the body to pick up sustainability standards. And the reason for that is that there isn't the expertise within the IASB. There isn't the sense of urgency within the IASB. And neither should there be a disruption of what the IASB is currently doing. The IASB does a very good job of doing what it does, which is setting financial reporting standards. The need here is different, complementary but different. Okay, the third element to the argument is would a sustainability standards board set up by the IFRS Foundation in pursuit of its own mission with respect to informing investors, would that benefit society more widely? And I think the answer to that is yes. Very clearly yes, because there is a positive externality from the IASB setting standards, from the IFRS Foundation, sorry, the SSB setting standards in this space. The first reason is that, well, the first sort of factor associated with the positive externality is that there is a considerable overlap in the information that investors require to understand sustainability issues with respect to capital market pricing and the information that other stakeholders need and want to understand. So to take an extreme example, if you're an oil and gas company, then the carbon emissions associated with your own operations and indeed downstream of your own operations represent critically important information for investors, because by 2050, you're not going to exist anymore in your current form. So investors want to know, well, how are you going to transition? What's going to happen? How are you going to not be an oil and gas company in the foreseeable future? That's an economic question, but the information you provide to answer that question is very similar to the information that society needs to understand. So there's a shared interest in carbon transition, and that's kind of, at some level, that has to be the case. Capital markets are not independent of society. The second reason why an SSB would provide a positive externality is that we currently do not have mandatory global standards for sustainability reporting. What we have is voluntary, inconsistent, incomplete, and incomparable. Now, the IFRS has a distinctive strength in this space. It has expertise in setting global standards. That shouldn't be underestimated. It's not an easy thing to do. It has legitimacy globally. It has an ability to pick and choose from the best of the best, right? So instead of saying, let's ask TCFD to take this on, or let's ask GRI to take this on, let's ask SASB to take this on, the IFRS Foundation is in a position of taking the best practice from across those different frameworks, rather than sort of being based on a path dependency, as it were. The final thing is that the SSB, by operating within the same organization as the IFRS Foundation, can align what it does with financial reporting. No other organization clearly is in a position to be able to do that so effectively. That's really important, because in order to be true to the IFRS's mission of providing relevant information to investors, investors need information that's relevant to them. And to make it relevant to them, it has to be connected with financial reporting, because what they're doing is evaluating enterprise value. So the fourth part of the argument, and this is absolutely critical in addressing the bigger picture, the question here is, would an SSB be sufficient to address society's information needs regarding sustainability? The answer is unambiguously no, it would not be sufficient. There needs to be an equivalent, in my mind, an equivalent organization to the IFRS Foundation, where the stakeholder is not investors, the stakeholder is government, civil society, and NGOs, but where you have something that is established with the same level of sophistication and institutional credibility and so on as the IFRS Foundation. But the burden of market failure, is in corporate activity and in the functioning of capital markets, is not something that the IFRS Foundation can or should be expected to fix. That's a governmental issue. So that's where there's a critical role for the EU, for the COP26 in Glasgow and so on. There needs to be a governmental solution to the problem of the rules of the game within which investors and corporations and capital markets operate. It's not for the IFRS Foundation to fix that problem. So the conclusion to all of this is that the IFRS Foundation would be making a critical contribution to its own mission by developing a sustainability standards board, because there's a very obvious gap in the information that it provides. It would also provide an extremely important social benefit by so doing, but it would not address all the problems that society has with respect to sustainability reporting. There is an additional need for sustainability reporting that is over and above that provided to investors. So let me stop there, Torsten, and hand over to the general discussion. Thank you.
Thanks a lot, Richard, and Carol both. You already see how fruitful this debate can be, and I think we already all have a lot to think about. But let me keep going on. In the following second part, we'll discuss the key proposals of the consultation paper, and Michelle and Lee will give brief overviews of its key 3 areas. And we'll then conduct short online polls for each before opening for your questions. Now, please, all of you in the participant group, if you would like to ask a question or make a comment, please write it into the chat. And subject to the volume of comments that there will be, I will try to call upon you to unmute yourself and ask it. If your question goes to a specific person, please indicate so. Michelle or Lee or one of the other speakers will then respond to you. If you have a comment that you'd like to share without needing it discussed, please preface your comment by chat only. And this could include, for example, pertinent research papers or other material. And we will save the chat and relay it to the IFRS Foundation afterwards. Finally, again, please do consider communicating your views to the IFRS Foundation in the form of a comment letter by the 31 December deadline. And like I said, the trustees are very much in listening mode, and they're interested especially in academic views that are informed by and explicit about pertinent research evidence. Now let me hand over to Michelle to launch into the second part. And Michelle, thank you. The floor is yours.
Actually, Thorsten, it'll be me who'll do this very briefly.
I'm sorry, you guys. Lee,
No,
please.
that's all right. Lee is taking
No
up.
problem. And if the slides could come up, we've got 3 areas that we wanted to cover. The first here is around the options that were considered, and to then lead into the high-level questions, the first elements of the questions that we've raised, and then we can certainly build into some level of the polling as well. If we could go to the next slide, please. Thank you very much. This is to encapsulate some of the thinking that the trustees were doing as they were developing up the consultation paper. You know, as I mentioned earlier in my introductory remarks, number 3 was the creation of the Sustainability Standards Board. obviously back to that key requirements element as well. But other options that were considered by the trustees was the maintenance of the status quo, i.e. for us to continue just simply with the vast work that the ISB undertakes. There was a sense that that was perhaps the lowest risk in some sense for the trustees to pursue, but was not providing the level of benefit that we had gained already through some of the internal, the informal engagements of meeting stakeholder needs. And I think some of the earlier comments we've already heard covered that as well. I think we considered also around the facilitating how to help with some of the existing initiatives coming together. There was a sense that that could lead, may not have, but could have led to us becoming another voice, adding somewhat into the complexity of the situation without necessarily delivering some level of aggregation into that. We were just simply adding into the discussions. And then finally, there was this sense around the preferred option of being the creation of a sustainability standards board within the current governance of the IFRS Foundation, which includes the oversight by the monitoring board, sitting alongside the ISB, and clearly, importantly, working with all of the existing initiatives that are currently underway and trying to build on top of that thinking. So if I may then come to the key questions, these are straight as we've developed them within the paper. Is there a need for global sustainability standards? Should the IFRS Foundation play a role? Is a new sustainability standards board within the IFRS Foundation an appropriate approach? And then the requirements of success, or as I indicated earlier, paragraph 31 of the paper. The polling question will be that third one down in the slides there. So if I could go to my colleagues to perhaps set that up. And Thorsten, while that's occurring, you may wish to reach out for starting some of the questions, and we can then provide a little bit of critiquing as we go through that as well.
Thank you very much, Lee. So the poll is open. We're interested in your views, and while they're coming in, please do feel free to raise questions already. I keep monitoring the chat, but it seems to be quite silent so far. So here's your chance to address your questions and comments to the foundation. And this includes all of you. You might also, if you would like to speak up without typing anything first, you might also raise your virtual hand, your blue hand, so I can hopefully see you on the participant list as somebody who would like to speak up. So Tim has a question. Tim, please speak up. This is your question about what's going to happen to the 5. Tim, please.
Hi, Thorsten. Yeah, thank you so much. No, I'm just wondering because the 5 body, CDP, CDSB, SARSB, GRI and IRC has recently announced their intention to merge and work together. So with the creation of SSB, what is going to happen there? Is there going to be a takeover, or is there going to be sort of a institutional collaboration, or something else perhaps?
Thank you. So we're probably figuring out who's taking the question. Lee, do you have an opinion on this?
I think Michelle may wish to.
Yeah, maybe I can offer some. I think, you know, I think clearly this is something that it's a developing situation. We have had some engagement already with those organizations. They have, as you know, themselves engage into a program of cooperation and interoperability and eventually consolidation. I think that, you know, I really like, I think what Richard said at the end, which is, I think this initiative is not one we should see as a solution to everyone's, you know, to all the issues and all the demands. Each of these organizations may have a role to play going forward. And I think we are very open-minded at this stage in terms of, you know, the level of cooperation and the type of cooperation and the type of consolidation that could emerge from this process. So I think my answer would be, at this stage, a very open mind, a very positive level of engagement with this organization, and something that will be dependent on their own objectives and how the board going forward look at its future and the contribution that each of these organizations could make to its development. I don't know, Lee, if that makes sense, or if you would like to.
Sure, and if I may just add a little bit more. Tim, I see your question in sort of two layers. There's one about the bodies themselves, and as Michelle's indicated, they're certainly doing discussions and engaging with each other, and we'll work through that. But it's also about the expertise that they have. And, you know, right at this point, I know they're working through what they're describing as some level of prototype around climate. And I think we would be very keen to see, as many others would, how does that start to look like and feel like, because then you've got the expertise of all these groups coming together. And I think that's, and again, quite an exciting development, and hopefully we'll see that soon.
Thanks to both of you. I think this was the most successful call for participation that I ever launched in any of my Zoom classes with my students, compared to those at least. So we have now quite a few, and again, limited time. A couple of them are about the relation between a future sustainability reporting regime and the current IFRS when it comes to financial materiality. I want to ask Giovanna Michelon to please ask her question, which kind of summarizes these notions. Giovanna, please.
Thank you, Thorsten. Thank you, everyone, for your contribution this morning. I really appreciate we are discussing together this very important step. So when Richard was discussing materiality, a lot of the things he said with respect to what's material for investor really just resonate with what is already to be considered materials for investor under perhaps IFRS practice statement number 2, where in a sense, companies should be disclosing any information that may affect materially the investment decision. So it is not clear to me why we would need another standard board that discusses materiality in similar ways to which we are discussing issues that relate to financial statements. I see the point about perhaps not having an obligation, but yet if the risk is material, so these companies in 10 years' time will be wiped out because we have new regulation or dramatic changes in the way in which they need to run business, investors should know about it right away, and we don't need a set of standards to define that. And then the other issue is, I really think we already have a set of global standards. The GRI started developed more than 20 years ago. They have gone through several revisions and several consultations to come to the standards that they are today. And so perhaps it's not so much the need for a global set of standards, but that these standards are made mandatory. And we know that things often change when companies report information under a mandatory regime rather than a voluntary one. So perhaps lack of comparability, even if it's hard to discuss what comparability is in a sustainability information context, I think may be related to the fact that we don't have regulation around sustainability reporting rather than we don't have standards about it. Thank you.
Thank you, Giovanna.
Lee, do you want me to start? And you will.
Yep.
Okay, I think it's interesting because you may have seen that a paper was recently published actually by the ISB, just actually reflecting on the level of reporting and disclosure obligation that exists under existing standard basically already. And when you read that paper, you reach the conclusion that there's already a number of things that should be disclosed through the financial reporting. I think here we're really looking beyond financial reporting, and I think that's some of the points that Richard was making through this concept of discontinuity and other matters that are relevant to investors. And that area clearly is not something that the IFRS standards are covering. In terms of the, why financial materiality, I think the question, this is really because that's really, I think, what the key mission of the standards are centered on. And this is something that, we felt, at least at the starting point, needed to be the sort of the building block of what would be done. Your last point about, GRI is already a standard, and why do you want to create another set of standards? I think this is actually the question. I mean, as we said at the outset, we are in a consultation phase. We're trying to understand, we're trying to learn, we're trying to get advice and opinions, and this session is extremely helpful, obviously, in that context. And some argue that GRI is indeed the standard and should be used. Others disagree with that. Others, so there are a number of views around this. And I think at this point, I think our view is quite agnostic. And all we're trying to do is really answer that question: is there a need for a global standard? And if GRI is felt to be the solution, I guess that will come through. I think at this point, there is a lot of competition against different types of solutions. And so I don't think there is a level of consensus as, that would lead to that conclusion. But that's something we're trying to understand and explore.
Mm-hmm. Thank you, Michel. Lee, would you like to add to that, or should we go to the next question?
I wouldn't mind just if we could, it's not on my screen now, Thorsten, but do we have the results of what the first poll was? Because that's actually valuable for us coming from this session as well. I did see it at one point. Yeah, it's remained fairly constant then. So thank you for who put those up. And so I think we're around about the 79% no, around 14, and prefer not to answer around 7%. So thank you for those that have provided that feedback. We just touched on materiality. We do have a question to come back into that space. So we are trying to keep this in a flow. So perhaps if I may ask my colleague to take us up to the second question or second slides, which is around the key requirements for success, please. This was an area that I'd made reference in my opening remarks to. Here we are. And on to the next one, please. Just to set this up again, when the trustees were working through the development of the consultation paper, and they were looking at the possibility of the creation of a sustainability standards board, they really started to focus in on what were the key requirements to determine whether there would be successful the creation of the board. And the ones you have on this screen are the ones that were identified. I know many times we've touched on these already to a degree. The global support, working with regional initiatives. We've had some reflections about our current governance structure, ensuring that we have appropriate technical expertise, not just the expertise of setting standards, but into the area of sustainability. Funding, synergies we've reflected on to a degree as well. and finally ensuring that there is not that sense of compromise to the important work that the ISB has been achieving. That's certainly come through strong in some of our earlier engagements as well. So we're seeking feedback around these requirements, not just the ones on the screen, but if there's ones that haven't been identified as well, we would really welcome that level of feedback. And perhaps if I could then go to the poll, please. Thank you. Just to read that through then, do you broadly agree with the key requirements for success as outlined on paragraph 31 of the consultation paper, or as I've just taken you through on the slides? And again, it would be really valuable for us if you're sensing the answers no here through the chat to identify what might be missing there or what needs greater amplification.
So again, votes are coming in. Maybe we can go to the chat in the meantime. So there's been a little bit of follow-up to the previous discussion, but I think I'd like to go to a new question here that is touching on a little bit more fundamental issues. This is from Charles Shaw. Charles, would you like to unmute yourself?
Yes, hi, thank you, Thorsten. Yes, I was making more general comments, but also I noticed that a lot of the arguments when people start talking about sustainability start with the importance of it, in the sense that we should understand it, and then a lot of it very quickly focuses on the importance of the investors and capital markets. And I think the two very loaded concept and terms that we sometimes use loosely is about sustainability per se, because I think we have seen in the definitions in some frameworks that sustainability per se could mean also the sustainability of the business and the investors, as opposed to social, environmental, and planetary sustainability with the SDGs. So should we really agree on what type of sustainability definition are we talking about? And in terms of materiality, what is the materiality for whom and for what? Because we're talking about materiality in the financial terms, and we know in accounting how we have, come to address this issue with threshold and judgments. But what becomes material when you have social and environmental problems, such as I gave an example in the chat, like how many child laborers would be to be material or immaterial, or how many acres of planetary pristine habitat should be destroyed before we call it material. So I'm just wondering, like, in what perspective and what paradigm we're talking when we use those terms, which are very, very key to the debate today. Sustainability for whom and materiality for whom, and of what?
Thanks, Sean.
The general question for both the IFRS and maybe Richard, who has put his argument. So thank you.
Thank you, Charles. So
Thorsten, I might lead on this if that's okay.
yes, please.
And again, I can see how our participants have certainly jumped across to, again, a question I was going to do in the next session, which is around, and I think some of the questions that were just raised by Charles interlock between the thinking about the scope, which I think he was asking what is sustainability, and I think our questioning there has been to consider a climate first approach if the Sustainability Standards Board was to be created. That's the sentiment, but then also thinking through the target audience and the discussions we've had already between, in effect, the investor group as well as that sort of broader multi-stakeholder focus as well. The trustees haven't settled on this, which is back to why we're asking these particular questions. We've tried to give a sense through the way we've written the paper that there is some what you might describe as starting points that have a level of logic behind them, and therefore the investor focus is obviously a flow on from where we are with the work of the ISB. That's where a lot of the heavy lifting of the ISB has been done already. I think when it comes to scope, there's been some recent remarks by Mark Carney through his work at the United Nations, and his sentiment was around the encouragement to focus on climate first, because there was a sense that's where the urgency of thought, as well as perhaps the more commonality of approach by government, was most acute. And I think after there, you find that perhaps other areas of sustainability, equally as important, have much more varying views of governments and public policy. But that was certainly some remarks I'd seen recently. Richard may wish to, or Michelle may wish to add to that.
Richard.
Michelle, would you like to go first, or
Yeah,
Richard, would you like to answer?
Maybe I'll let Richard. I think I'd be interested in hearing Richard, and I say a word after that, maybe.
I'm trying to parallel process here. I'm trying to reply to earlier comments on the chat. Just to pick up on the first comment Charles made about the meaning of sustainability, and this links also to what Giovanna described about materiality. I think this is really, really important. So there's materiality in the sense of relates to an amount in the financial statements, and there's materiality in the sense of relevant to investors in making investment decisions. And the latter is much broader than the former. So to give you a real example, to pick up on the example I gave earlier of a legal obligation to net zero carbon, not creating a liability. That's a very real example. So I sit on a body that advises the UK government reporting, and in the UK government accounts, there's a big nuclear liability and there's a big pension liability, but there's no liability for climate change to speak of. And I raised this, and the answer that I got from the government's financial reporting people is, well, it's not a liability. It's not, nothing to see here, right? So from a financial materiality lens, it doesn't feature, right? But if you want to understand the government's financial position and what needs to change, then there is a looming and very large and very significant financial commitment. So it matters to, in this case, to users of the government's accounts, but more generally to investors, to understand sustainability information. That sits outside financial materiality. So think of it as investor materiality rather than financial materiality. And that's where there's a very significant overlap between providing information to investors by the IFRS Foundation and providing information to society. So to Charles's point, the focus for the IFRS Foundation is providing information to investors. Sustainability is required to that end, to the end of understanding sustainable financial performance, but it's nevertheless sustainability information that is relevant to other stakeholders as well, critically important to other stakeholders. And I agree with Carol here on the question of making information visible. Accounting makes things visible, and it makes it part of the dialogue, both within a sort of enterprise value creation lens and within a stakeholder value creation lens. So these are really important points that I think are very closely connected.
Can I just respond to that? Because my concern was that accounting can actually make things invisible, and that by focusing on things that are easily translatable into financial materiality, we are making other key things invisible, like the physical impacts of climate change, for example.
No, I don't think that's right. So again, so what I'm not saying is sustainability metrics are financial metrics. On the contrary, I'm saying they're non-financial metrics that are relevant to understanding enterprise value. So carbon emissions is not a financial metric in the sense of it's included in the financial statements. It isn't and should not be included in the financial statements, but it is the metric that is relevant to wider stakeholders to understand carbon footprint. So I think it's absolutely critical not to conflate sustainability metrics that relate to science-based targets that are relevant to investors and financial metrics.
Okay, so this is becoming a challenging job for me to allow those people in the chat with important points and still controversial points, of course, to voice themselves. What I would reiterate, please, all of you who will not end up being allowed to speak due to the time limit we have, please do put your arguments into the chat, and we'll save that, sort through it, organize it, and relate to the foundation. So all of these arguments can be considered. So even if you don't get to speak, please write down what you think. In the meantime, the polling results have come in, and Lee, if you agree, I would end the poll and share the results.
Please, thank you.
So we can look at them. And maybe while we look at them, I would like to take one more question that relates to one of the success factors, which is about achieving sufficient global support, and to some extent the relation between a possible SSB and other bodies. And this is from Stuart Cooper. Stuart, would you like to phrase your question in the plenary?
Thank you. Yes, so my question really relates to something that Richard said in his discussion, where he suggested that the IFRS Foundation could set up a standards board that would be relevant for investors, but there would need to be a second board alongside that would help provide standards for other stakeholders or society more generally. And so I suppose my question is around, well, first of all, do the representatives from the IFRS agree with that need for a second body? And then secondly, my concern would be how the impact would be on that second body. Would it always be a poor neighbor to the investor body? Thank you.
Thank you, Stuart.
I'm happy to have a crack at that first, Thorsten. We're really not at that point, to be perfectly honest, in certainly considering relationships and so forth of things that have been settled, because naturally we're in a point of consultation. What I can say is that across the breadth of the organisations that I referred to in an earlier slide, the work of the TCFD, the GRI, the SASB, etc., we've had recent statements by those groups, the statement of intent, which came out in September. And since then, there's been further engagements with the trustees, both with the group together as well as on a bilateral. And so I think what we're endeavouring to do as we go through this consultation is to understand exactly what parts each role is playing, and getting their thoughts around where some of the developments would head in the future if we were to get that far. And we're very much in listening to those who have been heavily involved in this work so far.
Maybe if I may, and I think Richard should also step in at some point, because I understood his point to be different. What I understood was, yes, there is a need for the foundation to set up, and there's a role for the SSB as proposed, but there is also a need for a different board, which would have a different agenda, a much broader agenda with a much wider range of stakeholders, basically, and which would try to address more policy or public policy needs, basically, and engage with governments and others. That's how I understood basically what Richard was suggesting. And I think that all I would say at this stage is that I think we don't see ourselves as the end of, as a solution to all the issues and a solution to all the steps that need to be taken in order to bring the level of visibility and transparency on this issue we're talking about here. So I think that, again, and Richard may confirm, but my understanding was that this was something that was outside and in addition to whatever the ISB or the foundation would be doing. And to me, as a person, I find that very appealing as a concept, to be honest, but this is a very personal view.
Michelle, that's already being done by the Global Reporting Initiative's Global Sustainability Standards Board.
Okay, so again, we we are seeing a lot of traffic here in the chat, and I think it's now time, Lee, to transition into the third part and address our hornet's nest of materiality.
I think we've gone there already, Thorsten, in
To
my slide and question. So I'm going to congratulate the team to at least say, well, we're continuing the right conversation. So if I could have that slide up just around key considerations. Again, this is built into the work that we've done in the consultation paper. I think I made brief reference to the first point around scope, and certainly a sentiment around that we'd heard through our informal consultation. But as I've said earlier, there's other public statements starting to be made that climate really should be the first approach if the Sustainability Standards Board was set up. And clearly there was a sentiment not only of the urgency in this space and the importance of it, but certainly where perhaps there was common alignment more throughout governments around the globe that needed to be considered. The second, which needs no introduction because we've already been covering it through discussions about the approach to materiality, starting with that focus more around the investor, or whether the sentiments is for a greater sense of attraction to the multi-stakeholder. And one element that we perhaps haven't touched on because it flows through is that we have been receiving comments and reflections that, you know, if the desire is to get more rigor into the reporting, to get that comparability and consistency of reporting, then there needs to be considerations done to how assurance would actually be achieved on the reporting here as well. And that element's been put in there particularly to make sure that we see that sentiment of importance around insurance as well. If I can come to the third polling question, I know we didn't really wrap up on the second, albeit we did see that was quite a high presence of not wishing to produce an answer, which I wasn't entirely sure why that was the case. But if I could come to the third question, please, for the poll, and do you broadly agree with the proposed scope of the potential Sustainability Standards Board commencing around climate in the first place?
So just to follow up on the second one, there was a 59% agreement percentage.
But a high level of prefer not to answer.
Yes,
I think
exactly. So very few outright disagreed with it. Mm-hmm.
Yeah.
In the meantime, while the votes are rolling in, I would like to give Begonia the floor again, because she has a question that directly relates to the materiality notion.
Me? Well, my question is is Thorsten?
Yes, please.
Well, it's materiality and it's more things at the same time. I wonder if I wouldn't say it's obvious that if the focus of the standards is investors only, and adopting a sort of outside-in perspective for the materiality idea, which is also considered financial materiality in a broad sense, because it's not only recognized elements in the financial statements, it's also disclosing information through other indicators. Is there a need for a different board, really? Couldn't be that accommodated within the current ISB in an enhanced body? Perhaps the IFRS Foundation has also to change in some way its mission and refer to not only investors but others. That's my point. Is that a need of such a body? I understand that the topic itself is relevant. It has to be dealt, but thank you.
Thank you, Begonia. I might make the first remarks on that. I think the sentiment would come in a couple of different ways. One is around, I agree with you, it's an important area that needs attention. Currently, the ISB is just undertaking its agenda consultation, and that's actually going to take forward for the next 5 years of work. And so to look at that work of that board at this time, many would say, you know, more needs to be done in other areas other than what we're talking about here today. That's of critical importance. And please, ISB, get on with that work as swiftly as you can in order to make sure that the financial reporting standards and framework really, in a way, keep up to date with the changing nature of business and how it would go on. Secondly, you know, there would be that real risk that if you to bring too much into one board, you would really start to compromise the effectiveness of that work in a multiple of ways. And so the thinking then is, how do you enjoy the benefits within inside the IFRS Foundation in terms of the due process, in terms of the oversight of the monitoring board and the transparency it does, and then to allow it to operate independently, but alongside to deliver what in effect, and you know, no matter where the scope of the Sustainability Standards Board may land, you do get a sense that it's going to be a very busy board as well.
Thank you, Lee. Michelle, are you getting ready to say something because you unmuted yourself? Do I see this right?
No, I think Lee was,
right,
you know, clearly on where we stand, and I think that, so no, nothing
Okay.
to add from my perspective.
All right, thanks. So again, there's,
Haven't seen the results.
yeah, so let's look at the results. So we have, here they go.
The prefer not to answer one seems to be getting,
Yeah.
I don't know if anyone participating can give me a bit of an insight into that. Maybe it's the timing, or more time needed to reflect on it. But
Maybe we can get some help on interpreting some of these no answers or no IFRS, no answers from Karin. Karin has just posted something into the chat that might help us understand a little bit of what people are thinking we're not answering. Karin, would you like to speak up?
Yeah, well, it's exactly as I say in my response. I think the greatest danger of what I see in the proposals so far is that it's all about disclosure and reporting and not about changing behavior. And that's what worries me, because every company, every auditor, they're not about changing behavior. Essentially, they're trying to get back to business as usual, but then within a sort of framework. So that's my main concern. That's why I vote no. So unless that's addressed, I don't think there is any chance of real success, and it will just be a lot of effort for no good reason.
Thanks, Karin. So I'm looking over to somebody responding. Not sure who would like to take this. Maybe we can also just let it sink in a little bit. So there's, again, quite a bit going on. I think what a lot of you are bringing up as one of the main points is, again, a much broader notion, a much more fundamental notion that relates to what the IFRS Foundation, and I'm not sure I'm finding the exact question and the verbatim formulation of it, but I try to repackage it. I think some of you have been asking, what is the IFRS Foundation's view on what sustainability reporting is intended to achieve? Is it more about adding to the information set of capital markets, allowing capital markets to become more efficient and investors to make better decisions? Or is it about effecting change in companies' behavior and developing towards sustainable development? And if if you think those are compatible objectives, that might also be an answer. But I think people are interested in your view on what is the ultimate objective of the sustainability reporting that you are proposing, including its initial focus on climate change. If I'm summarizing this correctly.
I might, Michelle, have a first go at that if you.
And I'll supplement that.
No problem. There's a couple of pieces to unpack there, because I don't see the two elements of what you raised, Thorsten, as being independent of each other, and therefore it's either one or the other. I actually see them coming together. You know, part of my career was spent as a regulator, and you know, part, not the only level of solution, but part of the solution on finding behavioural change is transparency. And that transparency of what's occurring is a very important factor, and regulators will use additional disclosure in order to get a level of behavioural, cultural change, however you may wish to describe it. I'm not saying it's the single and only element of how to deliver that, but it is an important piece. So one could argue with some of this conversation, better disclosure. Is that, because I think I heard earlier, well, would the better disclosure lead to anything? Well, in my sentiment, it may very well lead to that behavioural change, but that will depend on what's being disclosed, how it's comparable, how much is it rigorous in what it's presenting as well.
Mm-hmm. I think something that also came up earlier relates to your last point on your last slide, the notion of assurance. I think one important element to what you've just said is the extent to which companies can actually be held accountable for these disclosures, to what extent they are actually auditable. And maybe you can share a little bit your take on you know, for example, the current audit community's reluctance to audit the type of information that we're talking about, and what this means for the extent to which these kinds of disclosures, these kinds of reports can be made auditable.
Yeah, look, I'm not sure I can reflect around, you know, the professional firms' views around that, but what I can say is in the consultations, the informal consultations that the trustees have had, the sentiment that, okay, if this is to achieve consistent and comparable information being reported, the element of assurance needs to be considered as part of that equation as well. So we thought it was important enough to include those reflections within the consultation paper. Part of that, we've obviously made reference to the stakeholder relationships that the foundation has in place. But for others, it will be up to the audit profession, the auditing standards board, that if these standards are further developed, what can they actually do? And that's for those groups to make those views. But we wanted to make sure the element of assurance was certainly referred to in our consultation paper.
Mm-hmm. So I think, Lee, we can now show the results, right, for the third one.
Thank you. Bit of a mixed spread there as well. Thank you.
Okay, so given the progressing time, I would like to allow one person to speak with a question that also goes into the direction of assurance. So Stefan Schaper, would you like to ask your question here? Again, I'm having to be selective, and it's not an easy thing to do, but Stefan seems to be right on target with his question here.
Great. Yeah, thank you for giving me the word, and thank you for this great initiative. I just read some time ago that the Big Four have released a reporting framework about ESG and a number of metrics that is now going to be tested, or they are encouraging at least to test it in the big US companies. I was wondering, reading about that, it has certainly a focus on providing investors again with the information they need. But following up on the scandals, the Volkswagen scandal recently or others, isn't it, when we talk about sustainability, also what Charles was saying, more about do they actually provide real information? Is it substantive? Is it correct? Rather than understanding who is more, who is less sustainable. And therefore, if what role does assurance play in general? And maybe if assurance company informed regulation might be actually making a contribution to that. So maybe more a reflection than a question, actually.
I think what you're saying, I'm sorry.
You're right, sure.
No, I was going to say, I think there's two points in your comments. One is about the information itself, and then the value of assurance, basically. So,
yep.
You know, good assurance on poor information or irrelevant information or not really useful information is not going to provide much help, basically, or much progress. And I think what we need to thrive is really for both, basically. One is making sure the information is relevant and helpful and you know, address the needs. And separately from that, there is a level of assurance that is needed. The assurance is important, but also I think Carol has made in different papers and or contribution, I think that shouldn't be also a limiting factor in terms of defining the type of information you're ready to provide, basically, and because it's, you know, it's an evolutionary process, and also you don't want to be sort of boxed in by the availability of assurance, although it, as I think Lee said, it's pretty important.
Okay, thank you very much. Again, there's no hope to allow everybody to speak, but we will again save the chat and make these comments available. I think it's now almost time to conclude, and let me do so by thanking the IFRS Foundation for reaching out to the EAA and for considering the views of academics and for allowing all of us to have our views heard and for inviting comment letters. I think this is really a great signal that academic perspectives, evidence-informed opinions matter to the IFRS Foundation. And I think all of us agree that this is a very important area to tackle. And I think most of us would also agree that we're grateful to the IFRS Foundation for stepping into this breach and at least trying to be part of the solution to the problems that we're facing in this context. And while we might disagree on how to exactly go about this, I think the majority of those who have been speaking here today thinks that at least a global set of standards, a global set of, let's say, requirements, mandatory requirements for sustainability reporting is needed. Although we can, of course, disagree on what exactly that information should be about and who it should address. But I think we also have heard arguments that there will be some overlap between information that is important for capital markets and information that is important for society in assessing companies' impact. So the inside out and outside in perspectives might not be so divergent. There might actually be quite some overlap. Of course, the discussion is not over, and understanding a little bit about the IFRS Foundation's processes, I think this Sustainability Standards Board, if you should conclude that it should be erected, will not happen tomorrow, right? And I wish you personally all possible success in this endeavor. And I'm again grateful that you have taken the time to listen to academics' views, and I hope that we have been a little bit constructive and a little bit helpful in this whole process to you. Thank you, and all of you that participated as well. Thank you very much.
Thank you.
Thank you very much, Thorsten. Thank you very much, all of you.
Thanks a lot.